What is up, guys? Welcome back to my channel. So what if I told you you could literally start trading with any amount, even as little as $0.7? Yes, you heard me right, $0.7. That is 7 cents. Just 7 cents. You could literally start trading with such an amount and grow it to any amount you want. Do you believe that is possible? Yes, I will show you how that can be possible today using this powerful strategy that I'm going to share with you guys. Okay, but first of all, I'll show you proof that this account, you can see this account is currently at 21 now, 21. So I'm going to show you that I started it with $0.71. yes, $0.7. That is 7 cents. I'm going to show you how I started this, grew it to this point with this strategy. Okay, so you know that this strategy is a very powerful one and you can use it to milk the market. Okay, so if you like this, if this is what you want to know and you find value in this video, make sure you smash the like button and subscribe to the channel if you are new, and turn on the post notification bell so whenever I drop any new strategy you get notified. Also check the description box, there is a link to my Telegram channel. You need to join our Telegram channel because see this trade I took now, this trade that's running right now, you can see I have them already in my channel. I posted the signals, you can see, posted the chart setups here. So if you can, as the trade is running, everybody is making profit, and this is just free of charge. And this here, people even comment, members drop their comments and add their views, okay, on what they think with my signals and every other thing. You chat with me directly and ask me whatever question you want to ask me. Okay, so that is it. Make sure you check the description box, you find the link to my Telegram channel. Join us and interact with the community of traders. You find traders who are beginners like you, who are advanced more than you, and also who you are better than. So you find all those categories of traders there and you interact and share knowledge and learn more. We grow together. Okay, so make sure you join. It's in the description box. The link is in the description box. Okay, so okay, let's go to the history here. You can see this is a week's history. Now if you can check very well here, you see we have $20 here as profit. Okay, and then you can check here, see we made a withdrawal of $7. Okay, then here we have a balance of 13.65. right now. Just stay with me while I do the simple maths with you guys. Actually what happened is that here, if you check, this is the balance here, which is 1438, right? 1438, that's the balance that we have right now. So if we subtract the balance from the history, that's the balance of our profits. You know, we have already withdrawn this. This was our total profit, but we've already withdrawn this. So what we have left of our profit is this 13.65. So if you subtract this 13.65, if you subtract it from 14.38, let's see what it's going to give us. Okay, is it? You subtract 13.65 from 14.38 from our calculator. You see, this is our answer here. We got 0.71, and that is exactly the account balance. That was the account balance when I started trading with this account. Okay, that was exactly the account balance when I started trading. You see, so when I tell you that you can actually start trading with as little as $0.7, with as little as $0.7 or $0.71, or in as little as you can, as little as you have, even $1 or $5. You can start trading with that and you grow your account. You just need to know what you are doing, right? You just need to have a combination of the right strategy, the right mindset, and the right risk reward ratio. The right risk management. That's it. Once you have these three things, the right strategy, the right psychology, the right risk management, these three things, once you have them, believe me, you can grow any account. Size. Okay, so that is just the fact, and I'm going to show you the strategy I use and how I manage my risk using the same strategy. I'm going to show you all that so that you implement the same thing in your own account, right? So that you can implement the same thing in your own account and make the same profit and achieve the same results. Okay, so let's start right away. I'm trying to trail my profit. Okay, I'm trailing this because this trade now is risk-free, so I'm trailing it. Now, the strategy I used here, you can see, first of all, when I started, I took trade with the lowest loss size. I took VIX 75, and then I got 1.86. Took another one using the same lowest loss size. I was able to get 7.72, which gave me a total of 10. So I was excited being able to raise 0.71 to $10. $10 dollars. It doesn't happen every day. It's uncommon, and I was excited, so I decided to buy myself an ice cream. Right? I deserve it, isn't it? Let me know in the comment box if you think I deserve it. So I had to withdraw $7 to buy myself a vanilla ice cream. I love that vanilla ice cream. Okay, so I took that. Then I continued the trade. You can see it took volatility 10, took volatility 10 again, took volatility 50, took volatility 50 again, and we are all profits. Then look at this one. I took this volatility 75 here, and then I lost 0.07. Took another one again. I got 0.41. Like this, can see, made small losses, made small profits also. That's it. So the loss was never more than the profit, and that's how we grow. You can see, you don't allow yourself to lose too much, and that's just it. That's how we grow in this business. So guys, I want to show you the strategy I used that gave me the risk management, that gave me the psychology, and that gave me that became a good strategy to me. Okay, so let me show you. Now that is the same strategy I used to take this trade. So let's go to VIX 75. Okay, I think let's check that this works on VIX 75. The strategy actually I used was very simple. Break and retest strategy. Those of you that have been following me, you know that I always talk about the break and retest strategy. Everything I share on this channel is about the break and retest strategy. Even when I am using indicator, the indicator will always also confirm to the break. It must always conform to the break and retest strategy. Okay, so the break and retest strategy is of this nature. It's a very simple one, and this is the principle. We know that the market moves in wave, impulsive wave, corrective wave, impulsive, corrective, This corrective, we call it pullback or retracement. Impulsive, corrective, like this, like this, like this, like this, and this is called market structure. Okay, this is market structure. So this is break of structure here, break of structure here, break of structure here, break of structure here, break of structure. Okay, so market is giving us a low. Oh shit, sorry, let me get this again, like this. Okay. Okay, so the market is giving us low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Oh shit, what is happening? Okay, this is it. So the market gives us this high and lows here, lows here, and then we have this break of structure here, break of structure, break of structure, break of structure, and the rationale behind this break and retest strategy is that since price gives this correction and it's usually back to this structure that was broken, so this strategy seeks to find opportunity when price comes back to this broken structure. That is what this strategy does. You want to wait for price to break a previous structure and then come back to retest it, right? That's what I normally do, because this is just the best way to trade. Okay, when price comes back to retest this strategy, when price comes back to retest this structure, you look for an opportunity here to enter. Probably you are going to see another block, or you are going to see a breaker block, or you are going to see a kind of support level there. Okay, so any of these, you use them as your confidence. Then once price comes back to that your point of interest, which is either your other block or your breaker block or your support level. So when price comes back there as a point of interest, you wait for a candlestick pattern that will signal your entry. The candlestick pattern can be an engulfing pattern like this. I like using the engulfing pattern. It could also be a pin bar like this. I also like this one, pin bar. I also like it. It's a rejection, so it could be anything, right? It could be a star candle like this, star formation like this, star formation like this, right? Where you have this kind of thing, call it morning star, right? So it can be something like this. Then you make your entry, stop loss. But if it is only this, you make your entry here and then your stop loss is here. Okay, it's so simple, guys, so simple. Now let's go to the chart. Let me show you guys how it works. Okay, let's go to the chart. Now look at what we have here. We have something like this here. Okay, so this is where price actually broke the structure here. This is where price broke the structure at this point. Yeah, so it came back here, it tested this level and left, then broke the structure again. So this shows you that an uptrend has started. Guys, you need to look for a trending market. In this case, you don't just need to jump in anywhere, you need to look for a trending market. And when you have a small account, you need to master sniper entry. You need to be able to look for where the price is reversing immediately. So when price breaks out of this level here, what I do is I want to go to the lower time frame, which is 1 minute time frame. That is the lowest. I go to my 1 minute time frame, right? Going to my 1 minute time frame here. Let me look for this. Okay, this is it. And now my 1 minute time frame is, obviously you can see that this is the other block here. Let me bring this. Obviously this is the other block here. As you can see, this I want to use all this area as my area of interest. So when price comes to this area, most times it doesn't necessarily have to come back there, because if you on the 5 minutes time frame, we see that this the information that you gave us here. When I see this kind of thing, I like to mark it. This is it. You see the overlapping of these candles. Let me zoom in so that you see properly. The overlapping of these candles is what I'm talking about. The overlapping of these candles here. See the wick of this candle overlap the body of this one. So to me, it's a kind of imbalance, and I know that that's where the demand is going to be. That's where the other block is going to be. So what I normally do is I mark it out completely like this. I go to my lower time frame, my 1 minute time frame. Let's get it, and that is exactly where price returned back to. Okay, it's my point of interest, and as soon as price comes back there, I wait to see a rejection, and you can see what happened here. As soon as I got this engulfing candle here, this is it. That was my point of entry, and this my stop loss below this fractal. On the bottom of this fractal, you can see this thing that looks like cap. That's what we call fractal. This that looks like cap, that's what we call fractal. So on the bottom of it is my stop loss, and then here is my first take profit. Okay, the previous high, the most recent high. Sometimes I go back to that time frame that I use in making the analysis, which is the 5 minutes time frame. I even have this bar that's here because I actually took this trade, so I still have this bar. This was where I had my take profits. So that's it. That was my first take profit. I can see sometimes I trail it using this moving average, the 50 moving average. This is the 50 moving average here. I trail it, I wait for price to close below it. Then that's how I did it, and that was exactly how I got this $7 here. That was exactly how I got this $7. You see here, that's exactly how I got it. Okay, so this strategy, guys, is so powerful. You can see that I have a trade running also on boom 500. It is this same strategy that I used, and let me show you guys. You go to the 30 minutes time frame here, you see. Okay, let me go to the 1 minute time, 1 hour time frame. It's clear. You can see here, price came here. Look at what happened, guys. Pay close attention and you understand this. Look at what happened there. Price came here, rejected, came here, rejected again, and came down. Then it went, after it came here, it went back, broke this level, and went up here. So I waited for it to return back here. Okay, you can see I marked it out, waited for it to return back. Then I actually gave the chart setup. I posted it in my Telegram group, which I showed you earlier. So I waited for it. As soon as price came back to this point, you can see this is our breaker block. This is our breaker block here. This candle here. So to me, I'm not even looking at the breaker block because I have this multiple rejection, which means this is my support level. So as soon as price came back here, that was when I made my entry, right? Place my stop loss below it, right? I went to lower time frame actually. Let's go back to lower time frame. That's where I actually did what I did. This is it here. You can see on the this is it. You can see my bar. This bar is still here, safe, right? It's still here. That was exactly where my stop loss was, because this is what I saw as a breaker block. So I decided to use this breaker block as a stop loss here, below it here. Okay, so I placed my entry here. I actually used the buy limit here, place my stop loss there. I can see price came in and it spiked immediately, is it, and continued spiking. Now this was my this is where I have placed my stop loss now, because I'm trailing the stop. in case I decide to leave my phone and go for any other thing, if price retraces and goes beyond here, I want to close, because this is also an other block here. So I assume that if price traces back to this place, it should be able to spike. But if it breaks here, then I don't know what might happen next. So I want to go out of the trade. That's what I do. So this is how we apply risk management. Okay, this is how we manage our risk. I know that from here to here is what I'm willing to risk. And then I used 0.3. This is a small account, so I use 0.3, only 0.3. Okay, so it's not going to cost me much from here. Let's even see, using my crosshair, you see that from this point, from this entry point to this point where I had my stop loss, it's just 15 pips, right? 15 pips, and 15 pips. If let's go to my calculator, let me show you how I calculate the risk. 15 pips, 15 pips, and then I multiply it by my lot size, which is 0.3. You see, it's just $4.5 that I'm risking. $4.5. I can afford to risk that. I can afford to lose $4.5, right? I can afford to lose it, but here you see that I didn't lose it, and then what I'm actually targeting is far higher than that. Look at my target. This is where I will close some of my profits here. This is the point where I will close. You can see the bar here, some of my profit. Then I will still allow some to run up to this point, because I see this trade going further than here. This is where I have my major take profits here. You can see this high. So look at, I'm risking 15 pips, and then I'm targeting how many pips? 86 pips. You see, the risk reward ratio is very high. The risk reward ratio is very high. So I'm targeting 86 pips, while I'm risking only 15 pips. So let's see what is the risk reward ratio here. You are going to know the risk reward ratio. What you do is to say 86 divided by 15. You see, 1 is to 5.7. So I'm risking 1. It means I'm risking 1 to get 5.7, right? So if I lose $1, I will just be okay. Okay, this means that I'm risking $1 to get $5.7. You see, this is a profitable business. This is a good risk reward ratio. So this is how we know our risk reward ratio. This is how we manage our risk very well. Okay, this is how we apply proper risk management. This is how we do things, guys. So make sure you follow this strategy, guys. Make sure you follow this strategy and grow any account at all. Okay, so if I can grow this account from just $0.71, why can't you grow your account of $10? You that have account of $10, why can't you grow it? Why do you have to blow your account of $100? So use this strategy. You see, we even got another spike here. So the account is growing. It's growing. That's it. Is it? So use this strategy, guys. Use this strategy and milk the market. So from here, I'm moving the stop loss now to this bottom, because I'm seeing a low. Once this is confirmed, once a fractal here appears here, then I'll move my stop loss to it. That's it. That's how I'll be trailing the stop until it hits my take profit. Okay, guys. So I believe you understood the strategy. Okay. So let me give you a recap. To use this strategy, you need to see a trending market. I need to see the market making this kind of structure. You need to observe this kind of market structure, right? It might not be very perfect. The market is never perfect, but it has to look like this. Then you have to see a break of structure here, then a pull back, maybe to another block, or maybe to a support level here, or a breakout block here. Okay, anything like that. This is it. Same thing here. Once you see it, you need to look for a candlestick pattern. Now, there are several candlestick patterns you can look for, which I have already shown you. You can use a pin bar like this. You can use a pin bar, or you can use an engulfing candlestick pattern, right? Or you can use a morning star or evening star, whatever candlestick pattern you know to use. Use it once price has come to your area of interest, your point of interest. Look out for this candlestick pattern. When you see them, if you are entering here, this is your stop loss. If you are entering here, this is your stop loss also. So you measure the pip between here to here. When you measure the pip, how much do you want to risk? How much do you want to risk? Now, let me show you how to know how much you are willing to risk. Now, on this trade, I wanted to risk $4.5. Okay, so and I measure the pips. I measure the pips from my entry point to where I want my stop loss to be, and we discovered it was $15. 15 pips, right? Using the cross share, we discovered it was 15 pips. How do you know how many? This is where you see the pips here. Look at it here. You can see this. This is it. That's 15 pips. So 15 pips, and I want to risk $4.5. So what I'm going to do is I will say $4.5 divided by 15. Divided by 15. So you see, this is 0.3. It's 0.3. You see, so that will be my lot size. I'm showing you how to know the lot size that you should use. So you can see that was exactly the lot size I used here. Look at it. That was exactly the lot size I used. Okay, is it? That was exactly the lot size I used there, 0.3. This is how you manage your risk, guys. Don't do anything different from this. Don't go and blow your account. Don't go and say because you think you are very sure of this strategy, because you think this strategy works so well, because you think the setup looks very assuring, and then you want to go and use your entire margin. You want to go and expose your account to too much risk. No, that's not good. That's not professional. You manage your risk properly, and believe me, if you use this strategy that I have shown you guys, if you use it consistently, I assure you, you are going to be profitable on the long run. Okay, you will remain in the market forever. Okay, so I just said, let me share this with you guys. Let me know what you think in the comment box, and make sure you show some love by liking this video. See, I also have this actually running. This is I have this one. This is boom 300. I also share this strategy, this setup. I shared it on my Telegram channel as well. Look at it. This is where this price is coming. It's also the break and retest strategy. Actually, this is where this thing is actually coming to retest this other block here. This is a support level here. Okay, this, you can see this was tested before. This was tested before, and the price rejected. So price is coming back there too, and we have another block here also. We have another block here. So price is coming back to retest them, and after it does that, it will zoom off to this level here. Let me show you. This is the level. Okay, so it might actually even go beyond it, because we have untapped liquidity. We have untapped liquidity here. Liquidity is resting above here. It's also resting above here and here also. So it might go beyond it, but this is where I want to stop. This is where I want to stop. Okay, so I will take that trade once it's complete, but first of all, I want to enjoy this pullback first. I want to enjoy it. I want to make money out of this one. Look at it. Once it gets, I will not wait for it to reach here. This is where I will just stop. Once it gets here, I'm out. That's how we make money from this business, guys. You need to learn it. Trading is very sweet. It's very interesting. It's an interesting game. You just need to understand the dynamics of the market. The reason I actually stopped here is because we have another block here also. So price might reach here and decide to reverse. That's why I decided to stop here. Okay, it has not been mitigated. So you must understand that you do your top-down analysis on the 4-hour time frame, which I was earlier. On the 4 hours time frame, you see that that mitigation block will not be shown. You see, you can't see it here. It doesn't appear. But if you go down to 1 hour time frame, you will see it. This is it. If you go down to 30 minutes time frame, you will see it also. So that's it. That's the importance of top-down analysis. And if you want me to make a video on how to do top-down analysis, just let me know in the comment box below. Okay, and I'm going to make a video on how you can analyze the market from the daily time frame down to the 1 minute time frame, and be able to find profitable trading opportunities. Okay, so this is where I'll be ending the video, guys. If you watched to this point, congratulations. Watch it again and again until you understand the concept I've taught you, and make sure you show some love by liking this video and then also sharing with your friends. And if you are new, make sure you subscribe to the channel and turn on the post notification bell so you get notified whenever I drop a new update, a new post. Okay, and also join our Telegram channel. Check the description box. Check the link in the description box. Click it and then join our Telegram channel. I shared all these chart setups. The trades I'm taking now, the trades that are running, you can see I shared the charts. I shared the setups. This one is VIX 50. I shared it. This is it. You can see this one. This one is the boom 500 that is running right now. That I just showed you guys. This is it. I shared the setup, and some people might have taken it. Some people who saw it would have taken it. This is crash 300. Also took this and it's running. Okay, so that's how we rule this channel. Make sure you join this channel. Make sure you join this group, this Telegram channel. The link is there in the description box down below this video. All right, so thank you, guys. This is the Alpha Trade saying remain profitable. And in case you are interested in my VIP mentorship, my VIP signals, account management, or my trading robots, or my custom indicators, make sure you DM me via Telegram. Reach me through Telegram and I will send them across to you almost immediately. Okay, so thank you guys for watching and remain profitable. This is me signing out.